Hello and welcome to the Napatech Half-Yearly Report 2019. Throughout the call, all participants will be in a listen-only mode, and afterwards there'll be a question and answer session. Today I am pleased to present CEO Ray Smets and CFO Heine Thorsgaard. I will now hand you over to Ray Smets. Please go ahead with your meeting.
Good morning, everybody. I'm pleased to welcome you all to Napatech's 2019 Half-Year Report webcast. I'm Ray Smets, CEO of Napatech. With me today is Heine Thorsgaard, our Chief Financial Officer. Today's half-year report for 2019 was fully and finally released earlier this morning on the OSC and is available on our website at napatech.com. Following our prepared remarks, I will open up for your questions. If you would like to ask a question during live webcast call, please follow the instructions on the webcast screen to call in and ask your question. I would also like to inform you that the Q&A session is included in the live webcast as well as in the recording. For your information, the recording of this webcast will also be available on the Napatech website later this morning. Next slide. Please note that this presentation contains forward-looking statements that are subject to a number of risks and uncertainties. Our actual results may differ from those discussed in forward-looking statements. Next slide. During this presentation, I will present Q2 and the first half 2019 business highlights, an update about our market and our business progress, a detailed review of our first half 2019 financial results, and a revised 2019 outlook for our business. Then we'll open up for your questions. Next slide. Q2 and first half 2019 highlights. Next slide. I am pleased to announce that Napatech has posted yet another sequential solid quarter and continues to execute well in 2019. We delivered solid revenues in Q2, generated healthy improvements to our gross margins, and for the third quarter in a row, we delivered positive cash flow from our operations. This combined with good Q1 results, we are pleased to finish our first half of 2019 with good momentum. As many of our investors know, we've been working diligently on reestablishing a solid and stable foundation that we will build and grow on by focusing on existing customers to maintain and stabilize our revenues, but also building new revenues with new customers with our market-leading packet capture product line. Execution on the top line is paramount, of course, but we also paid a lot of attention to improving how we manage our existing expenses and working capital to bring as much benefit as possible to our cash position. The results are good. 3 quarters in a row of positive cash flow, sequential improvements in operating efficiency and expense efficiency, improved management of inventory, and working capital are all important achievements for us so far. It will be very clear in our detailed financial reports, which we will review a little later in the presentation, that our execution has resulted in marked improvements to Napatech. I am also very pleased with the progress that we've been making to build new strategic products that we believe will bring Napatech into new opportunities and provide a path for revenue growth over the years to come. One of our major initiatives announced a few quarters ago was the launch of our partnership with Intel to sell our first software-only solution for our world-class link capture product running on Intel's FPGA-based programmable acceleration SmartNIC card. We set expectations that building revenue would take some time, and I'm very happy to report that our first win in Q2 with this new software-only product initiative has taken place. Another strategic product development initiative that we have announced and are working on to give Napatech access to a growing opportunity in the expanding virtual networking space is to bring a solution to market that leverages our expertise in FPGA software to accelerate virtual switching, as some experts call OVS. This is a CPU-intensive application that must run well in the cloud. I am happy to announce good progress testing our solution with several key new customers, which qualifies that we are on the right track with this new strategic development initiative. I am convinced that our expertise in FPGA software running on both the Xilinx and the Intel FPGA chips will give customers new ways to solve their ever-expanding problem of getting better performance from CPU-hungry applications that run on servers in the cloud. Before I go too far, I want to bring your attention to our new logo and brand for Napatech, which we're just beginning to unveil. To maintain and enhance our identity in the market, it is crucial that we stand out from the SmartNIC crowd. Our brand is instrumental in achieving this. It must represent what we stand for. In recent years, we have witnessed that our market transitioned from hardware-centric to software-focused, and Napatech's new logo conveys that same story. To better represent the new Napatech, our brand has been reinvented to a new, more modern brand with a colorful tagline, Reconfigurable Computing. If you're a software engineer, like many of our customers, uniquely, it looks just like software code. Over the last year, our company has gone through a major transformation. We are a renewed company with a renewed sense of optimism and are keenly focused on delivering value from our FPGA software expertise. Our new logo is intended to demonstrate the new and improved Napatech with an emphasis on our commitment to accelerating apps on FPGAs running Napatech software. Next slide, please. From a numbers perspective, we delivered good revenue growth in Q2 of 39.6 million DKK, up sequentially from Q1, adding up to 77.9 million DKK in the first half of 2019. That's a 66% year-on-year growth compared to the first half of 2018. Even better than we delivered in Q1, gross margins continued to remain strong in Q2 at 72.6%, ahead of our 68% annual guidance. Strong margins demonstrate two significant points for us. One is that we're doing a good job managing our product design and cost, but also it's a good sign that we're getting greater returns for the high-value product we provide. All in all, our good performance in the first half of 2019 shows that we have the right plan, the right priorities, good execution, and good momentum to build on, and we hope our investors will agree these results are a marked improvement over last year's performance. I'll invite Heine later to share the financial details shortly. Next slide, please. Now I'd like to give you an update on our market and our customer activity in Q2. Next slide, please. Napatech brings its expertise in FPGA software and its ability to accelerate CPU-intensive applications to a very relevant and massive market opportunity. We all know that all applications are moving to standard and open server-based architectures in data centers. These data center networks, often called clouds, are built on highly connected open standard servers where applications of every type, either consumer or commercial, are being deployed. This migration to the cloud makes these applications easily deployable and available, but they don't necessarily perform better. With the massive increase in data and the fact that the server CPUs are no longer getting faster and cheaper as once Moore's Law predicted, the SmartNIC comes into play as a solution to accelerate applications in these environments. The SmartNIC, FPGA-based SmartNIC, comes of age in this market condition, offering cloud or data center-based application providers a better way to enhance the performance of their servers by offloading the server CPUs and accelerating the application performance on FPGA-based SmartNICs. Next slide, please. So the way we see it, Napatech and its FPGA software and SmartNIC solutions are in the right place at the right time with the right technology to capitalize on the growing needs for application acceleration. But we didn't get here by accident. NICs, or network interface cards, were invented to fit into servers to provide basic connectivity between multiple servers in a data center. But as the economics improved with this architecture and as data centers moved to the center of the IT universe, the need for more efficient service solutions developed. The SmartNIC, in the right place at the right time, became the workhorse to make servers work better and more efficiently by offloading server CPUs with increasingly complex networking functions. In comes the FPGA, which takes the NIC to a brand new level. The FPGA makes the SmartNIC software configurable and goes to the heart of the need to improve server performance by moving more workloads and applications to the FPGA. This transformation, which has been in motion for almost 2 decades, has been further fueled by the needs in cloud networks to massively scale performance, improving cloud economics by reducing the number of servers deployed to solve specific use cases, reduce total cost of ownership, improving space and power efficiencies, and opening the door to moving even more applications to the cloud. So the FPGA continues to evolve within this industry, and Napatech remains in a good place to capitalize on the trends we are seeing. Next page, please. Market reports like this one from Cisco's VNI Global Cloud Index show that the growth in data traversing the cloud infrastructure is growing at an alarming rate. And more of the data in the cloud domain is being driven by the virtualization of network infrastructure and virtual switching. These functions are mission critical and will need to perform at ever-increasing scale, thus needing to be accelerated. We see the growing demand for speed and performance of virtual network functions, like virtual switching, to be a key opportunity for Napatech. And with a growth rate like what we're expecting to see, and also what you see on the slide, we believe a bigger market will evolve as service providers and enterprises work to solve this problem across their virtual network deployments. Next slide, please. So again, the FPGA is in the right place at the right time, and Napatech's expertise to make the FPGA work to accelerate applications puts our technology into a very interesting market opportunity. We aren't the only ones who believe this. As you can see, players like Xilinx and Intel have invested billions to bring their FPGA to the market. In our technology domain, Intel and Xilinx are the center of the universe and own the majority of the FPGA chip market. And we have strategic relationships with both of them. All of the major cloud infrastructure companies like Microsoft Azure, Amazon, Google, or even Alibaba, just to name a few, have all standardized on their own version of an FPGA-based strategy to accelerate applications and solutions. The major server makers also like this space, looking for ways to distribute SmartNIC FPGAs to their customers, making their server offerings more competitive to the needs of their market. And right behind all of these players are the service providers, who are virtualizing their entire mobile and landline network infrastructure, and they have publicly stated that the FPGA is the technology of choice, and they will leverage it to provide higher performance and service assurance. So the growing problem is servers just can't keep up. The solution is the FPGA to solve this performance gap. But these FPGAs won't work unless they have software to make them optimize specific applications that they need to accelerate. That is exactly what Napatech does. Next slide, please. So given all of this opportunity, how does Napatech access the market and grow its revenue? We design and deploy FPGA software that solves problems for specific areas of the market. Most of all of our revenue today is based on our market leadership in FPGA-based packet capture solutions designed to serve the needs of network management and a portion of the cybersecurity market. Our customers design our FPGA SmartNIC with our software into their solutions to deploy higher performing applications to their end users, customers. This is what we call a design win. And these design wins often create multi-year streams of revenue as our OEM customers deploy them. About 70% of our revenue is based on current deployed products we sell to existing and new OEM customers who have designed our products into their solution offering. The way we will grow our business is to target higher growth parts of the SmartNIC market and sell these solutions to existing and an even greater number of new customers. Once we are designed into our customer solution to accelerate their applications, we will see revenue generated from their sales to their end users. Design wins develop good revenue momentum, but can take time to develop depending on their product development cycles. Our growth in 2020 and beyond will come from design wins that we're making today, and we are pleased to show you some progress we're making to build new revenues on top of our existing current revenue streams. Next slide, please. As a way to demonstrate our progress growing our business, I want to highlight 4 key trends that we saw in Q2. The first on the left is a new design win with an existing global test and measurement services company. In support of their flagship product, Napatech's FPGA-based SmartNIC and software were selected to improve their product's performance around the capture, storage, and retrieval of network traffic, which in turn improves their customers' network performance. Napatech was selected due to our superior product performance and our trusted relationship, which allowed them to design out the competition and standardize on Napatech as a single source vendor for this particular application. The second example from the left is a new cybersecurity design win with an existing technology partner who integrated the Napatech FPGA-based SmartNIC and software into a data protection solution sold to a top multinational pharmaceutical company. The use case was to accelerate a critical cybersecurity application focused on data loss prevention for this company. They selected Napatech because our high performance and reliable solution. The third box from the left is quite exciting for Napatech. We have been designing new strategic products focused on acceleration of virtual switching. We have validated our solution in the labs of 2 top-tier server manufacturers focused on selling its service solutions to service providers that are virtualizing their network infrastructure. Completing a design win takes time in environments like this, but our successful testing validates that our product strategy is moving in the right direction and provides an optimistic perspective of the potential for revenue growth from this product that we're bringing to market. So this is a watch this space example of one of our key growth trends we saw emerge in Q2 that will impact us in 2020 and beyond. The final box on the right is an important milestone. As I just mentioned a few moments ago, we're announcing our first sale of our new and first ever software-only link capture product through our partnership with Intel to run on their FPGA-based SmartNIC. This first customer design win of the software-only offering validates our partnership with Intel and brings us an inspiring use case that we can sell to others. Although our relationship with Intel is still early days, we are pleased with the collaboration and the partnership, and we're excited to see new customers entering the pipeline interested in this solution from both Intel and Napatech. Next slide, please. To grow Napatech, we have a great strategy and we have a plan of attack. First and foremost, we have resolved ourselves to focus on our core competency, leveraging our core expertise in FPGA software to out-innovate the competition and build new higher growth product lines in application acceleration for virtualization and cybersecurity solutions. And we will do this by running 3 important plays. First, we will continue to drive FPGA-based SmartNIC leadership with our current packet capture solutions. This product delivers most all of our revenue now and will remain a stabilizing foundation for growth as we build on top of it in the future. Secondly, we will expand our SmartNIC leadership beyond packet capture to address new high-growth markets to accelerate applications and services in new areas of the cybersecurity market. We know our world-class expertise in FPGA-based solutions is highly leverageable and valuable to new customers building new cybersecurity solutions. So we will be supercharging our FPGA-based SmartNIC software and hardware designs to get access to these new high-growth parts of the cybersecurity market. And finally, we will continue to drive our innovative development in virtual switching acceleration, as we just talked about in this presentation, and emerge with a top-performing FPGA-based solution into new market areas in this massive move to the cloud for virtualized network infrastructure. We are more optimistic now that this new product area can create revenues in 2020 and beyond. Next slide, please. So we remain pleased with the activity and performance we strive to deliver at Napatech in 2019. Now I would like to turn the call over to Heine to review more details about our Q2 and our first half 2019 results. Heine?
Thanks, Ray. Revenue in Q2 amounted to 39.6 million. That's up 60% compared to last year. The revenue in the first half was 77.9 million, an increase of 69% compared to last year. Gross margins in the first half was 71.1 compared to 68.7 in the first half last year, and gross margins in Q2 was 72.6. The increase in margins is reflecting an improvement in the product mix. Staff expenses and remuneration were down 26% in Q2 compared to last year and amounted to 23.5 million. Staff costs in the first half were at 47.6 million compared to 61.7 million first half 18. Other external costs amounted to 7 million in Q2, and for the first half year, other external costs have dropped 23% compared to first half 18 when adjusted for IFRS 16. Operating expenses covering staff costs and other external costs before transfer of cost to capitalized development costs amounted to 30.5 million in Q2 compared to 43.3 million Q2 last year. For the half year, the operating expenses were 61.7 million this year compared to 84.8 million last year. This drop in cost levels is the result of a number of very focused ongoing cost management initiatives implemented in Napatech. EBITDA amounted to minus 1.7 million in Q2 compared to minus 26 million in Q2 last year. And the EBITDA for the first half amounted to minus 6.3 million compared to minus 52.4 million last year. Operating results in Q2 amounted to -5.2 million and -12.8 million for the first half, compared to -28 million in Q2 and -54.4 million first half of last year. Now let's turn our attention to the cash flow presented on slide 17. Cash flows from operating activities amounted to 9.2 million in Q2 2019 and 13.8 million in the first half year, compared to -18.9 million in Q2 and -26.7 million first half last year. That is an improvement in cash flows from operating activities of 40.5 million for the half year. End of Q2, net working capital was at 14.8 million, compared to 41.5 million end of Q2 18. 14.8 million net working capital corresponds to 37% of the revenue in the quarter. We've been working hard on optimizing net working capital in the last couple of quarters, with improvements on inventory levels and trade receivables continuing throughout first half 19. A net working capital level of 37% of the quarterly revenue is very low, and we are expecting our net working capital to increase going forward. Net cash flow used in investing activities in Q2 amounted to 2.9 million, compared to 10.8 million Q2 last year. Free cash flows in Q2 amounted to 4.2 million, up 33.7 million compared to Q2 last year. For the first half 19, free cash flows was 4.7 million compared to minus 49.4 million first half 18. Q2 was the third quarter in a row with positive free cash flow, and we are very content with that achievement. Net cash flows from financing activities were 12.9 million in Q2, driven by the payments from the subsequent offering. Cash and cash equivalents at the end of first half 19 amounted to 59.9 million. Page 18, please. We've worked hard this year to manage our costs and optimize our cash. Average quarterly costs for staff expenses and remuneration and other external costs in first half 19 was 32.6 million compared to 42.4 million in first half 18. Assuming margins at 69%, this equals quarterly cost break-even revenue of 47.3 million DKK or $7.2 million USD this year, compared to 61.4 million DKK or $10 million USD last year. Our efforts to bring down costs and improve net working capital in combination with our return to growth and revenue has resulted in a significant jump in free cash flow compared to previous years, as shown on the slide. We will continue our focus on cost and net working capital management going forward, but as mentioned, we expect net working capital to increase in the coming quarters. Going forward, the target for our net working capital is around 60 to 70% of the quarterly revenue. This is 5 to 10 percentage points below the levels of 15 and 16, and significantly further below the levels of 17 and 18. I'll turn it back to Ray to finish a few more topics and to bring us to the end of our presentation. Ray?
Thanks, Heine. Next slide. Thank you very much for that amazing update on financial. Now let's turn our attention to our revised outlook for 2019. Next slide. I'm on page 20, 2019 business outlook. Our more stable and continued good progress in our business and management of our operation raises our optimism around key financial areas that we've previously guided in 2019. We will continue to reiterate that we expect revenue to be in the range of 150 to 180 million DKK, that's about 23 to 28 million US, which will represent solid growth in 2019. We remain optimistic about this guidance halfway through 2019. Gross margins in first half 2019 had been higher than guided, and we are now raising our guidance from around 68% to 69% for the full year 2019. Our focus and good execution around managing our operating expenses gives us more optimism that we will beat our prior guidance. Therefore, we are improving our guidance for operating expenses by lowering the range to 110 to 115 million DKK. Also, with a sharp eye on managing the right level of capitalized development costs, we are more optimistic that we will beat our prior guidance range. Therefore, we are improving our guidance to a range of 13 to 17 million DKK, which continues to be significantly lower than the previous years. With performance in the middle of the ranges, EBITDA would be 1.3 million DKK. Previous guidance was negative 7.8 million DKK, and that's up 9.1 million DKK. EBIT would be negative 21.2 million DKK. Our previous guidance would have been 30.3 million DKK negative, and that's up 9.1 million DKK. In conclusion, our results in 2019 have resulted overall in positive achievement of what we set out to do: build a more stable, transparent, and more predictable business for Napatech. The good news is that we have improved Napatech beyond our original guidance, and we are optimistic about the stability of our business and its potential to grow and thrive in this highly dynamic marketplace. Me and my team at Napatech will continue to work hard and work smart, growing a business built on a solid foundation of FPGA technology excellence. We're living up to the expectations we have made to our shareholders in 2019, and we'll continue to strive to improve on all aspects of our business to capitalize on the opportunity that we see ahead of us. We are committed to find a way to succeed, and now we need to get the job done. Next slide, please. Now I will invite Heine to join me to take your questions. If you would like to ask a question, please dial into one of our phone numbers on the screen. An operator will answer your call and place you into a queue. Please keep your questions to 1 or 2 per caller. If you are already on the call, press 01 to ask a question. Operator?
Thank you. Ladies and gentlemen, if you have a question for the speakers, then please press 01 on your telephone keypad and you enter a queue. After you're announced, please ask your question. And as there are no questions from the phone lines, I will hand the word back to the speakers for any closing comments. Please go ahead.
Thank you, operator, and I would like to thank our investors, our customers, and especially our employees for giving us the time and the effort to make Napatech improve, and we thank you for your interest in our call. Thank you and have a good day.